Well, for the last few days, the theme in the market has been IT, and a lot of these stocks have outperformed. Anil Patwardhan, VP and Head Corporate Finance at KPIT Cummins, now joins in on the sidelines of the Religare IT conference. Hi, Anil. Thanks for joining in. Let's start with the let's start with the deal pipeline, because at the end of the at the time of the results, I think the company had mentioned that the pipeline has grown about 50% in last 6 to 9 months, and you're confident of closing some of them going forward. If you could give us some more progress on that.
No, absolutely right you are. See, we are very sharply focused on 3 verticals, as you know. So we are in automotive transportation, we are in manufacturing, and we have in energy and utilities vertical. So we see the deal pipeline getting built around these verticals for us, and we have set a target for ourselves of organic growth of 14 to 16% in top line. We have already registered 3% growth on sequential basis while declaring Q1 results, and we feel reasonably comfortable about delivering this top line growth, which is organic, and the deal pipeline which we have been able to create is across these verticals, and we should be able to close a couple of deals very soon, and that will actually help us drive this growth in the second half of this financial year.
Okay. Hi Anil, let me come to the margins picture. When you
Hi Lata.
When you detailed the Q1 numbers, you had spoken about 150 basis point hit to the margins because of currency, visa costs, and milestone-based discounts. Currency was the positive. Now, things have actually gotten even more positive since we last spoke to you. So, should we expect that Q2, the margin picture could improve?
So, actually, from the margin perspective, we would see the margin improvement going forward. We have talked about 100 to 150 basis point improvement in the margin over last year. As we progress in this financial year, we will see the margin profile being improved end of this financial year. These 3 SBUs, if we see the margin profile, we have automotive and engineering SBU giving us sort of highest margin, almost 20% at operating margin level. Then followed by IES, which is Integrated Enterprise Solutions, is giving us around 15 to 16% margin, which is inclusive of JD Edwards practice. And then SAP SBU, which is giving us sort of lower margin, which is impacting the company level margin. But I think as we move forward, we will see margin improvements there as well. The dollar rupee rate, as we see moving in the 58-60 range, so that will actually help us. But more than that, I think the operational efficiency of these SBUs will help us drive the margin.
Anil, in the morning we had an analyst tell us that the kind of rupee depreciation that we have seen, and the fact that it's not been a temporary phenomenon, and we now know that we have a bit of a base rate now for the currency, will make the IT companies more competitive going forward. Just wanted the view from company's point of view. Going forward, would you be willing to say lower your dollar rates to get more business? I mean, is that a possibility that we can look at?
No, I think dollar rupee rate has an impact on the margin of the company to the extent of we do the offshore business. When we do business on-site, which for example in SAP we do large implementation on-site, it is dollar rupee rate neutral business. So it doesn't have impact on the margin if we are doing business on-site. Now, when we look at the customer's expectations, if we are doing business on-site, naturally customer would be neutral about dollar rupee rate, because he would be more worried about the total dollar outflow from his pocket, and so long as we have a right value proposition, he will continue doing business on-site. When it comes to doing business offshore, naturally our value proposition is inclusive of what is the dollar rupee realization we are targeting, and so long as we are delivering the value as expected by the customer, dollar rupee rate would be one of the factors to arrive at the value proposition.
Okay. Finally, Anil, going by your geographic spread, you get, I believe, 10% of your revenues from Europe. Now, not 10, I think 10.7, so that's almost 11%. Is that number likely to improve, since the macro numbers we get from Europe indicates that the economy is putting a floor to it, things are getting better with each passing data point, as well actually in the US. So is volume of business likely to pick up? I think you spoke about a quarter-on-quarter revenue growth of 3%. In the first quarter, you actually reported 4%. Will you be able to improve the quarter-on-quarter run rate?
I believe that our business through Europe, we will continue to sort of drive this growth. See, we have a very strong presence in Germany, and Germany is strategically very important market for us because of our focus on automotive vertical. So what we are looking at is driving this growth through Europe. Predominantly it will happen through Germany, and US will continue to give us stable growth because that is the largest contributor to our revenues, which is almost 74-75% plus. And the Asia Pac region is actually helping us drive more growth, because the emerging markets, we see more traction for our offerings, and we should be able to see better than our company level growth in Asia Pac region.
Sure. Anil, you know, just looking back at your numbers, there was a bit of bipolarity in your numbers, in the sense that top 10 clients had a healthy growth. Outside the top 10, you actually had a degrowth quarter on quarter. So, you know, that raises a bit of a risk. I mean, at your end, are you looking at the non-top 10 clients as well in terms of having a growth over there, or are you happy with this phenomena of you know, top client and top 10 clients growing significantly, and even if the others don't grow that much?
No, I understand where from you're coming. Actually, our strategy is we have built a customer base of almost 75 plus customers, where we have $1 million plus run rate. Now, when you get into that kind of a run rate in customer account, your understanding of the customer requirements, your understanding of the customer's business is better, and then we can actually align our offerings to these customers' expectations. So my belief is that this 75 plus customers actually will help us drive our growth in the for this year as well as in the medium to long term. And considering our strategy of becoming $1 billion company by 2017, these customer base would actually help us drive that growth.
Right, Anil, we'll leave it at that. Thank you very much for joining us. That's actually optimistic
Thank
words. Optimistic words coming from Anil Patwardhan of KPIT Cummins. Market also